Welcome to ONS Energy Talk, and a special welcome to you, Nick Butler.
Great to be here.
Today we're going to talk about energy market, COVID-19, and the winners and the losers of 2020. This has for sure been a dramatic year, and a year that will end up in the history books for very special reasons. But now we're soon moving into this new year, and with an unsolved fate and impact of this ongoing global COVID pandemic. In your recent blog, ONS blog, you are elaborating about the pandemic's impact on the energy markets, the losers and the winners. And let's start with the losers. Who would you say are the biggest loser going out of this, and why?
What I think COVID did and continues to do is to emphasize the surplus of supply in the market and reinforces the weakness of prices. We've seen a sharp fall in total energy demand, and particularly in oil demand, because uses such as people flying aeroplanes has really sharply gone down through the year right across the world. And we've seen a price drop. I mean, at the beginning of the year, the price was around 60, 65 for a barrel of Brent crude, and that is now closer to 40. And it's only at 40 because we still have serious cuts by OPEC and others, over 7 million barrels a day, still taken off the market, plus what is not on the market from Iran and Venezuela. So it's the oil companies who have been the worst losers this year. Their revenues are down, they've had to cut dividends, they've had to write off a lot of assets, and shareholder confidence is down. So the stock prices have fallen by 50% in some cases, which is very, very sharp and serious, because they're a big part of the stock market in both Europe, in the UK and in the US. A lot of investment projects have been delayed in the oil industry, and thousands of jobs have been lost, including some in Norway. And then all the associated activities around the industry, the events, the meetings, the service sector, they've all been hit. So I think they are the main losers of the year.
You mentioned the oil companies, but what about, and this is the private sector, but what about the countries and the national oil companies?
Yes, it's not.
How are the status there?
Absolutely. It's not just the private sector. The fall in revenue affects the OPEC member states and other oil producers. I think OPEC revenue is down 50% this year, and that is feeding through. I think it's going to delay investment by some of the OPEC national oil companies, and it's going to cause real stress in areas such as the Middle East, which depends totally on oil revenue. Some of the countries are in difficulty anyway. Now they've seen the revenue cut. They don't have alternative sources of income, and they're also losers, and the full consequences of that have not come through to us yet.
I hear you're talking about an unbalance being growing in the Middle East, for example. But let's stop with the losers and move to the winners. Are there any winners at all in this play?
Yes, well, the one-word answer to that question is Zoom. And I think that the modern communications technology has really benefited a lot. And we wouldn't be having this sort of call and making these sort of broadcasts and podcasts and so on that ONS has adapted to doing so well this year, but for that technology. So they're the winners. But I think beyond that, the winners are the ones who've been resilient. The companies that have been able to reduce costs quite quickly, to manage their portfolios in a way that keeps some revenue flowing, to cut costs. And it's also the winners, I think, because we're in a low energy world now, are the companies with access to low cost assets. I think that they are at a premium, and they are going to do better in the future, because I don't think prices are going to shoot back up again.
winners and losers, at least the green political agenda has not lost too much momentum this year, and I think many would argue the opposite, actually. And what's your view when you look at that point, and kind of looking also into that? Some are just argue that what we see in the energy demand loss is just a temporary challenge that we have to overcome out of COVID.
It's not a simple story. I think the climate issue is still high on the agenda, and governments and companies are making very substantial commitments to move towards net zero, and that has spread around the world through this year. I think that those who are in a position to take up those opportunities quickly are going to do well. So I thought the announcement on a Northern Lights project in the last few days is very good, and it shows that countries who have been preparing for the transition, and companies who are moving in that direction can now take up the opportunities because the policy is coming into line with the technical possibilities. And I think Norway was able to do that because it's worked on carbon capture for many years. I think the UK, which has now decided it would like to do it, has a bigger problem because it abandoned CCS under a great mistake by the energy minister 5 years ago. So it's the people who are positioned in that sector who are going to do well. I think what we do need to realize is that the shift to a green world is not going to be instant. We should have an economic recovery next year as the pandemic is resolved and beaten back and contained by vaccines. But I think that recovery is quite likely to be fueled by hydrocarbons. The recovery has already begun in the Far East. China will have a positive economic growth rate this year, but that growth will be fueled by coal. And I think that the perception that has got around that because people are making these commitments for 2050 and 2030 and so on, that there's going to be an instant change, that is a mistake. It's going to be slower than people would want, but it is coming. But people are going to come to the end of next year and see with a recovery, emissions have gone back up, and they're going to be disappointed by that.
You're saying that the shift to a greener world is not instant, but what's your list of the most important indicators to follow moving into 2021 based on what you're saying?
Well, I'd give you 4 or 5. I think, first of all, one of the easiest ways to cut emissions is moving to electric vehicles. Norway's done that very successfully, faster than anybody else in Europe, but Norway's a very special case. I think what I would be watching there is whether there are more electric vehicles added to the fleet of cars and small vans on the road over the next 12 months rather than SUVs. SUVs have been growing very rapidly around the world, and they consume a lot of oil. And it's whether now, with all the emphasis on climate issues, people are actually beginning to move in a big way to electric vehicles. That's going to be one indicator. I think the next indicator is, again, about behavior. Are we all going to be flying again by this time next year? I think there's quite a lot of pent-up demand. I don't think that people have really given up on it. It will be very interesting to see what the numbers are in 12 months' time. Third one is also on numbers. It's about the companies, the international companies, whether they are going to now shift their capex, their expenditure on new projects each year. If they make a real shift, and I judge that around, if they're spending 20% of their capex in 2021 on non-hydrocarbon activity, then we really are in a quite a rapid energy transition. If they don't, it suggests that they still believe that hydrocarbons are the core of the energy market for quite a long time to come. And the companies judge on pure economics, their assessment of policy, and I think that's really one to watch. And then The last one, because the climate issue will not be determined in Europe or the UK or even the US. The real climate challenge is in Asia, and the Chinese government is due to publish its 14th five-year plan early next year. They've made a commitment to decarbonize by 2060. That's fine, but I think the real indicator will be whether that five-year plan shows a real move away from coal. And that will be a great indicator to watch in the next 3 or 4 months. It's all very well making long-term commitments and promises. In the long run, we're all dead. I think what really matters on the energy transition is what is done now. So those are 4 of the indicators, and I quote them because they're actually measurable, and we will see within 12 months what the real trend is.
Interesting, Nick. In your recent blog post from ONS, you have written, and you actually asked the question, shaken or stirred the energy markets after the dramas in 2020. What do you think, shaken or stirred?
Shaken, and certainly because of the loss of revenue and the cuts in dividends, that's a big step for serious companies. I think now there is a moment of real indecision, actually, as to how fast this transition is going to move and what the companies can do to balance all the competing pressures. There are pressures from governments now setting targets and expecting companies to deliver. There are pressures from people lobbying and campaigning. I think we will see a lot more in 2021 about extinction and the rebellion against the risks of climate change. And on the other hand, you have customers who want secure supply of energy, including the older energies, the hydrocarbon-based energies. And then you have shareholders who expect from the big companies a serious return. And the companies have yet to demonstrate clearly how they're going to make a serious return in renewables. There's an awful lot of wind and solar capacity. It is growing, but it's not an area where there are great barriers to entry or where people are making very high returns. So the companies have a challenge. How do they move from the old to the new? They recognize it's coming. They don't know the speed. And how do they move and still retain their shareholder base?
Those are great challenges, which I assume they will bring with them into 2021. Thank you, Nick. It was great talking to you, and thank you all to our listeners. And I really encourage all of them to read the blog post coming out just now. Thank you.
Thank you, and happy Christmas to everybody.